with our friends from FEG Token and smartdefi.com, and of course our exchange partners bydfi.com. And if you don't have a BYDFi account, head over there, enter K5Z for uppercase T, lowercase p. So everything's uppercase with the exception of the P. And grab your BYDFi account, because today, in addition to awarding our 2 trading bonus prizes, I'm also going to be selecting one winner who I will give access to the Trading View script for 1 month. So you'll have free access to our script that we use on Trading View that you see all the time here on our charts. The winner will have access to that for 1 month. So head over to bydfi.com, make sure you enter capital K, 5, capital Z, 4, capital T, and then lowercase p. Make sure you get yourself an account. You don't, if you already have one, great. You don't have to do anything. You just have to make sure you're enjoying your trading over there. So let's get to the markets. And what we're looking at now is just our daily Bitcoin chart, and we're going to cover Bitcoin and all the usual suspects. This is the spot daily chart that we haven't really marked up at all. This Bitcoin chart is our chart that we've drawn our levels on. And as you can see, even though when we originally are looking for these levels, which are essentially support and resistance, right? You're connecting tops and bottoms of areas that have connected on, and could be various time frames. And you really don't have a lot to go on when you start doing it, because the trading early on is kind of new. So it's remarkable to see how true these levels have become, days, weeks down the road. How current price will come back and tag the same familiar areas time and time again. And that's an advantage for you, the trader, because it gives you an area to understand where something may or may not happen, right? So like in this case, for example, that we talked about earlier in the week, as you're approaching that, you're saying, okay, if I get a breakout here, could be a big deal. However, if I fail, I'm going to go back and have to test some previous levels, which it did. And this becomes the breakout. And that brings me to my next point, because what I want to talk about today a little bit is the rules that we use, right? And there are several, and you may not use them all. You might have a handful that you really find reliable, and that's great. But someone reached out to me and started with telling me about some of their problems, and I'm thinking, well, a lot of this stuff is addressable within the rules that we're supposed to be following. And it never occurred to me that maybe people don't write them down. Right? Like, I have a book and a few other things around my desk and my screens that constantly remind me of what I should be looking for on the chart, so that I don't, run down and turn my computer on, fire up everything, and then just start making trades. Right? You slow yourself down. Make sure that you're making trades in a structured, professional manner. And I got reminded early this morning of one of the rules that I typically follow and didn't. And you've heard us talk about, you remember our friend Carpathia, who was here a few months ago, talked about the first mouse gets the squeeze, the second mouse gets the cheese. And that's kind of along the lines of how those first attempts at breakout levels may fail, right? That's the first mouse. And I first mouse myself. And I knew it as soon as I clicked the button. I realized what I had done. And I was like, oh, damn it. This is going to be short-lived. And it was. Right? So because it was the second breakout that mattered. So I ended up having to kind of kill that trade. And that was a mistake that I made because I hurried and I rushed and I didn't focus on those handful of pretty simple rules, right? Write them down. Like, find the things that work for you that build the ultimate entry, right? And this is a learn by doing exercise. And over time, it will always be tweaked and modified and refined, and that's okay, right? It's great to have a plan. It's also great to modify your plan when you need to. You're not going to continue to make mistakes if something's not working, right? But what are some of those rules that we talk about? And these are just some of the things that I look for on a regular basis. One of them is I'm always looking for when the 5 EMA on our script changes colors. I'll just shorten that time frame up so that you can see what I mean. That's one of the things I'm looking for all the time. And here's an example of it down here, where, you know, you've come off a bit of a downtrend. There's your first mouse, right? This is the failed breakout, comes back to the previous wave's low, and then the next the trend starts to change. There's our 5 EMA turning white and getting my buy signal. This could be a 4-hour chart, a daily chart, it doesn't matter. This is just, I'm just using the 1 hour as an example. So I'm always looking for, after an impulse down, there's the first wave that often gets rejected. You know that, and you're going to plan accordingly for it. If it happens to break, that's great, but they don't always. More often than not, they fail. But I'm always looking for the second ones, right? Instinctively, you'll notice that the first ones often fail and they end up just being quick trades. It's that second one that can change trend. And here you get an example of a buy signal that did not appear over here because there wasn't enough momentum to pull the 5 EMA up through the T line, and thus give it that influx of cash that it senses, and thus changing colors, right? So that's one of the things I'm always looking for. So we covered the first attempts, the 5 EMA on our script, when it changes colors. When you're placing your entry, be aware of, and I'll give you an example, this would be a good chart for it too. A lot of people would see this big red candle and they automatically want to short it. Or these two red candles, and they'll be thinking, oh, this run is over. Here's these two red candles indicating a top, and I'm going to short that top, and that's the trade that's going to make me rich. Now, be sure and be careful of, are you shorting up here a retracement or a trend change? And how do we tell the difference? One of the ways we tell the difference is by using, remember we believe in fibs, fractals, and filters, and what the 5 EMA and the T line are doing for us are they're filtering noise. The T line and 5 EMA stayed diverged on these candles, indicating that it had a higher probability of just being a retracement, allowing you to stay in the trade if you chose to do that, because the market was telling us, although this is sideways, it was still bullish with that divergence. And then we've seen this a million times. All of a sudden, boom, you get another run higher. This is another example of where looks like a top, right? And we have no idea what comes after each and every candle. We can just use the tools we have to have as best understanding that we can. Doji candle at the top of a bull run. I get it. Here's another one. But what do we know? What does this divergence tell us? And I'm sorry to beat this into your heads repeatedly, but it's something that I hope you never forget. That divergence is telling you you're okay to stay in the trade.
Hey, Blunt.
Yep.
I was just wondering if you could get a chance to take a look at the video in Telegram, just to make sure it went back up.
Are we not? I don't know. Are we not in Telegram?
Yeah, but the video seemed to disappear here. So it's just the audio coming through. We don't see the video in the VC chat at all.
Oh no,
There we go.
that was
Thank you,
my bad.
sir.
Okay, sorry, that was my bad. Um, okay, so as far as the rules go, write them down and keep them by your computer. Laminate it if you have to. At one time, I had a screensaver with rules, the stuff that I talk about every week. I used to have a screensaver that would run all the time to beat it into my own head so that I'm always thinking of the handful of rules that we talk about each and every week so that we increase the probabilities of not making mistakes. Which, when we make the mistakes, is when we're not paying attention, when we're trying to go too fast, and that's when things go sideways. But as far as these levels go, I think it's fascinating to see how true they've been, as we've moved along in time. Once you break through this level here, what do you think our next target's going to be? Our next target is going to be, obviously, the previous highs. And we're essentially back into that complete and total price exploration phase again, where people are going to be drawing trend lines and using all kinds of magic to try and figure out where price is going to go. And I don't try to be one of those people. All I'm trying to do is just follow the chart. This is a daily Bitcoin chart. Is it a bullish chart? Yeah, it's a bullish chart. I find it interesting we kind of double bottom off the point of control here and then take out this previous wave's high. Little stall at that previous level that we had. And then, we can see what the challenge is. You know how we talk about the points and flats, or the points in particular when you have these changes in direction, but they often become areas of support and resistance moving forward, and that's why I often use them, because they seem to line up. And anyways, here we are, pausing a little bit at this level, and that's to be expected, right? We've seen these things and we anticipate that. But next, what happens? You're going to be drawn to this level, which is also the upper value range on your volume profile. But once you take out that high, once again, it's complete and total price exploration. Let's just look at a weekly for a second. That's actually quite an organized move higher, right? Everything's fractal, so what we can see on weekly charts, we'll see on lower time frames as well. There's your consolidation, and here's your breakout. Clean signals, divergence, 5 EMA changes colors for us, telling us that we've got money coming in. We have an opportunity to the right here to see where the volume has and has not been, allowing us and giving us the opportunity to trade in and out of these gaps, because we know that price can move quickly through there because there really isn't a lot to hold it up. So a nice move higher, slight retrace, but very organized. Again, another nice clean entry, and this is a weekly chart, so it's not going to have as much noise. And you can see where we took a little pause, trying to figure out if we can break through this level here, which we weren't able to do, and just price pulls back. But it's not the end of the world. The sky's not falling. It's just a simple matter of regrouping, retooling, reloading, and then trying again. And the chart will tell us what it's going to do. Get a clean signal, all that divergence takes place again. and you're off to the races. And as long as that divergence is in place, this is a weekly, you're okay. As long as you can stomach the pullbacks. But it's still telling you that the trend higher is in place. Here's the chatter that we're getting, all of this sideways action. Like, look at, what is this level roughly, 119, 120 up in that area. It's a hard no. And anytime it tried to get up above it, it was pushed back. This candle looks like it's going to have something to say about that. It's going to want to test up here anyways, for now. Once we get up there, it's anybody's guess. But what are we going to look for? We're going to watch the divergence that we see between the T-line and the 5 EMA. We're going to be looking at our momentum indicators to see if they're telling us, are we running out of gas? Or are we actually fueling up and we want to take a run higher? This stochastic RSI on the weekly chart is looking like it wants to push higher, right? It's usually the first one that tells us what its intentions are. The Fisher transform was pretty clean on the way down, but it's starting to show us that maybe it's changing its mind. It's usually the one that follows the stochastic RSI. And then, of course, our MACD. Now, what do I like about this setup? I have these two above, these two indicators above, which is your stochastic RSI and your Fisher transform, that have pulled back into, that oversold area. The moving average and signal line, however, on the MACD is well above zero. And those typically, those are nice entries. And again, regardless of time frame, because we live in a fractal world. So on a weekly, here we get to put a little bit of a pullback on these two, but this guy stays bullish. And that to me is usually a bullish sign. This will kick up again, like the buyers haven't left. That's kind of how I interpret it. And then price will move higher. When it does, it's going to want to take out those wicks for sure, and then it's anybody's guess. You can draw a trend line and try and create a channel if you like, and chances are it'll stay relatively true, but it just gets a little irrational to try and pick price at a certain point in time. That's really not the job, right? We're here to do what? Monetize the chart. That means we have to do two things really well. Learn how to sell short and learn how to buy long. We can't sit on our hands if we can only trade long when the market turns and goes up and goes negative. You can't just stand there and watch. You have to be able to monetize the chart on the way down as well. That's the job. It's not to create a relationship with the asset that you own, right? It's just simply to use it as a means to an end. You don't want to get a part-time job? Learn how to read price on a chart. You want to find ways to find extra income to send your kids to school? Learn how to read price on a chart. You want to take an extra vacation or two a year? Learn how to read price on a chart. And no one will ever take that away from you. It's something that you'll learn, and it's like riding a bike you'll never forget. This is CFX Conflux. And I know Delatoshi, we talk about this and a few other things all the time, but it's one that I think Rico brought to us and has been, I think, something that a lot of us have enjoyed trading. This is the daily chart for it. And you can see we've got the volume profile up. I'll just pull this off for 1 second. We have a volume profile, lower value range, point of control, upper value range. You have to, without looking at any other moving averages on this chart, I kind of like that fishhook type of look, where you start to see, some consolidation and then momentum come in. You've got price trading above the T line. So this candle here closed above the T line, and this candle opened above the T line, although it did test those lower levels, but has found its way back above the T line. All of that is positive, or bullish if you want to interpret it that. The only thing that we can do, Dilatoshi, to kind of see where we may go next so that we can be prepared to follow, not front run, right, is keep an eye on our, obviously some of our other indicators. You want to make sure that you're getting that confluence in validation of what you see with price. So in the stochastic RSI, you can begin to see how it's wanting to move higher, supporting what you're seeing on the chart. Same with the Fisher. It's given us actually a really nice clean move higher. And when the one line gets really far away from the other, like, that's momentum. Simple as that. And then our MACD got beaten up bad, well below the 0 line, and is starting to have a heartbeat and looks like it might want to arc up. Could it, arc down and fade again and all, and, reignite a downtrend? Sure. But right now, you can see what happens. You broke that 0 level on this daily time frame, and it took it on the chin pretty bad, and now it's starting to show a sign of life. And the only thing that we can do is just keep dialing our time frames back, right, to make sure that what we're seeing on that daily chart will have the ability to hold. So you can see here's the 12-hour. Stochastic RSI is flatlining at like 98 and change. So it's very overbought. But that doesn't mean that it will instantly, so you see these two come together and everyone thinks, oh no, now's the time to short. You can have the stochastic RSI stay overbought or oversold for very long periods of time. You guys know that, right? So when you see this flatlining, it's really not a sign of life anywhere. You just got to wait for it to break out. And here you just have to, ride this wild horse until it's time to get off. But the 12-hour is supporting what you're seeing. You roll back onto the 4-hour. Whoops. Now this is interesting. You can see how price really was supported quite well by that lower value range of the volume profile. And let's just keep in mind, this is what you'd be seeing. What is this? Chop. Right? This is the chop that we talked about on Tuesday. We don't want to trade chop. We want breakdowns and breakouts. So here's our chop, and we just have to wait to get the signal that's going to actually run, and here it is. These are still trades, by the way, but they're just not much fun. This one is the one that was, I think, turning out to be the one you want. Divergence opens up. These are just retracement candles, right? So this is not the igniting of a downtrend on this time frame. So there's your move higher. These are simply 3 candles that don't break trend. So this is a retracement. That's it. And oh, look, next candle is green. And your momentum indicators are still very bullish. Nothing's falling off a cliff yet. Doesn't mean that it won't, but what you're seeing on those other time frames, the 12 and now the 4-hour, is supporting what you were seeing on the daily. That price trading over the T line and that hooking pattern, kind of like this, but on the daily. So what do you see here? This 1 hour, we don't have a buy signal yet, but if this keeps up, we might get one, because we can only work off what we're looking at. So doji candle at a top, everything was really overbought, and then you get the clear signs of a breakdown, which you'll see in price. Then you get your sell signal. You've got the 5. The momentum of price of selling has pulled the 5 EMA down through the T line. You got the divergence opening up. Right? There's your 2 equal bottoms. And now we're trying to reverse this this wave. You've got your stochastic RSI well below, like it's like 5, 4, something like that, and just starting to break out now, and also being supported by the Fisher showing the same kind of thing. So if you were to get Delatoshi a buy signal on your hourly chart, knowing what you're seeing on your daily, where you're coming out of some consolidation and starting to trade above the T line, like this is what you're hoping for when you see this setup, that it, you know, on the daily it's going to run. You're going to sneak those early entries if you can get them off those shorter time frames, like the 4 and 1 hour. But again, just looking for that continued validation here around the 15-minute, that price may want to continue the direction that you're anticipating. Right? When you're trading alts, by the way, though, you really have to be aware and respectful of the volatility that comes with them, because it's intense when it happens. Like you can be wrong a little bit and then in 5 seconds be like really, really, really wrong. And that's no fun. Okay. On the shorter 15-minute, obviously you're getting a little bit of turnaround. And where is it coming at? It's coming at the point of control. Once again, when you're at the point of control, the upper and lower value ranges, the shelves, you know, major moving averages, the T-line, when you have price exploring there, you know what to expect. This is obviously an uptrend. When you come back, you're hoping to find support at those levels, demonstrating that this would just be a retracement, and then the trend continues, right? You're looking for, in this case, higher lows and higher highs, right? Identifying that kind of up and to the right pattern. These volume gaps, you know that as you go through that process, those are the areas that you're probably going to get those swings, right? Price can whip into these gappy areas pretty quickly. Where will it find support? Where it's been before. And if it doesn't hold there, that's a tell that you probably have more downside pressure to come, and you can actually see where it is. That's a big gap, right? So you want, if you were long, you would want to avoid that gap. And what would be a target on the way down without anything else on the chart? The lower value range. When you see price like Delatoshi, when you see this impulse up, that creates this kind of a gap here. Sometimes we show this to the downside, but we're going to show it to the upside now. When you see that little bit of a gap and you're thinking, oh, this is a top, quite often is all that's happening is price is waiting for time to catch up. They'll kiss each other and then move on and continue. And these candles can often be real deceptive. So this impulse up, the horse gets too far away from the barn, it creates all this air, and price has to come back and kind of close that door. When it does, then it moves higher. The fact that it's not pulling back and, you know, you have this big red dagger and it's holding above these levels, to me, I interpret that as bullish. When we have the impulse down and price doesn't push higher and challenge these levels, then we interpret that as bearish. And I put the ish part in quotes. And the volatility that you see or that you experience comes from, you know, from what's happened in the past. So here's an example on the 15-minute of price spiking. What does price spiking create? It creates a big volume gap. And because we know that price naturally comes back to revisit past price, we know that eventually when we do challenge the point of control and, you know, perhaps don't fail it or don't hold it, and we get into that gap, well, then we look to the left to see where price has been before. All right. There's really not enough to go to the weekly, I don't think, on that. And I know the other thing that gets traded a lot that we've talked about in the past is this thing called FEG. And here's the daily. And I just should probably condense this chart a little bit so you can see how far this has come. right? Like it's one of those projects that's just popped and then just had a series of downward waves, and then it's just kind of started to show that there are signs of life. And these yellow lines were just areas that I've drawn in the past. But, you know, what's going on today? Yesterday's candle found support at this level that we dropped on. It's also just so happens to be almost in line with that, with the upper value range. And this is what you would have been looking at. So what do we say about the dojis at the top of bull runs, or, you know, waves higher? That they can often indicate a change in direction. Well, the same holds true when you find them at the bottom of a downtrend, right, or a negative wave. And that's what you see here at a, you know, 3 candles, and then this doji shows up right at the upper value range, and then we see this. You're oversold on your stochastic RSI, and you start to see those indications of a change in direction. Then we get this big monster candle. This is an incredibly volatile thing to trade, so I'm going to say that and, you know, preface that in advance. When you see it on the daily, it looks relatively organized, but when you shorten those time frames up, these are big, massive swings that are difficult to manage. But when you see it on the daily, doji candle at the bottom of a move down at a level that the market deems important, and then a change in direction, and then again your early signs, which is the stochastic RSI, is telling you that maybe it wants to pop, and it does. And I think this thing's up like almost 12% today. But it's hard to, it's like a bucking bronco, these things. It's hard to manage this kind of stuff. You shorten these time frames and you're like, oh wow, I'd love to catch that. But it's hard to do. Like, you know, picking the tops and bottoms is hard to do. Someone out there is trying to short this top. Guess what? They were also trying to short it here. Thought they caught it here, and they turned out to be wrong. But why would you not make that mistake? You wouldn't make that mistake because you have a clean entry right down here in the middle of your screen. That's what you would have looked at. You're like, okay, I guess I'm going to take that one. For all you know, that's, you know, grind sideways was going to continue, but it makes sense. You can see the divergence opening up, and then before you know it, you're off to the races. Those 2 red candles would not fake you out. Remember what we talked about before about the flush candles? And it's okay to take profits, by the way. Like, you don't have to stay in the battle all the time. Like, take profits. That's a given. But we're just trying to demonstrate what you would see as as the candles unfold. Still divergence, but you can see that red showing up, which tells you that, you know, there's a little bit of selling going on. Whoops. The T line and the 5 EMA stay diverged. Right? These are the things that I'm looking for all the time. Right? Part of the rules that we talk about, write them down, put them in your screensaver, you know, put it on a stand beside your computer, something so that it's always in your view, so that every time you make a trade, you're going to know those rules. Where's my stop? Where's my exit? I don't want to be the second mouse or the first mouse. I want to be the second mouse. All of that stuff so that you have a better probability of making a successful trade. But here you have this big red candle that shows up, but all that divergence is telling you the uptrend is still intact, and that's the important thing. And then here you go. We talk about it every week. We see it all the time. This candle is a flush candle. It's there to stop people out and cause havoc and make you think too much. You don't have to think because our script's doing the thinking for you. And the beat goes on. It's as simple or as complicated as that, right? It's as simple or as complicated as we want to make it. And just because things sound crazy doesn't mean they are. We just have to trade what's in front of us. But again, this is another example of how relevant the levels that we draw can be. We haven't readdressed this yet. But they're very important because they help you put some structure behind what you're seeing on the chart, which quite honestly, as we all know, can be somewhat chaotic. Here's our daily XRP chart. Where did you find support? At a level that we've outlined previously. So as price dipped and started to break out again, that's your first opportunity to try and create a level. Like right here you have these 3 candles. I should probably bring this. What we're doing is this is a bench, little bench. That's all it is. And this candle, impulse down, does what? Wicks it, and then price moves higher. That's instantly an area that I want to target. Right? That's what we see. That's my first opportunity to try and create some sort of a relevant level. Right? There's your following candle that kind of validates all of that for you. And then what do you see? See the 5 EMA change colors. You can see the divergence take place. This is what we just showed, right? On the 1 hour, the flush candle thing. Then you got the 2 bottoms. Boom. At this point, you're not thinking that you're ever going to come back and visit 273 again. It's left your head. Huh. Well, that's weird. This time we're never, oh shit, here we are again. So price will come back and tag that previous price. And what this has done, if you do this exercise, it allows you to kind of visually, at a glance, and I'm sure you can see the levels without the lines being there, but it's what they represent too that's important. That's your first opportunity to connect these little bottoms, and lo and behold, this becomes a relevant level again. And lo and behold, it becomes a relevant level again. And right now, as price is taking off, everyone's forgotten about this 273 level already until price comes back to visit it again and rewind play. Maybe there will come a time when it's unrealistic to expect to see it again. It's just very obvious it's not today. And this is just how price moves. We peel back the onion, we go to the 4-hour time frame just to see it a little differently and a little different perspective. Big swings again. Those are there to cause havoc, knock you out of your trade, and it's going to happen. But it's what happens when it does now. You have the tools to address it in a different way. Those flush candles, you'll be looking, wow, okay, I just got stopped out, but look at all that divergence still. I'm going to re-enter. And you get yourself a really nice entry too, and then price will move on again. Here you can see on the 4-hour, there's that 273 level. And what did it break through? Here's a bit of a volume gap, right? That's easy for price to move through. And then this one here, that was created back here, what happens when price goes into it? This is why you want to long into these gaps and short down into them when the opportunity comes. This is how you monetize the chart. I'm not thinking about XRP being $10 by December 31st. I couldn't give a rat's ass. I really couldn't. I'm a trader, not an investor. Put it that way. It's just a different form of investing, I suppose. But I don't care. I'm not thinking about it. I'm not going to be on Twitter every waking hour talking about it, because it's not realistic. It might be someday. It's just, again, not today. The job today is to monetize the chart, right? And if you're trading and you've been trading for a while and you're not comfortable trading short, get comfortable, and soon. Because you have to be able to sell long and sell short to be an effective trader. Or if you want to seriously consider, supplementing your income in a significant way, you have to be able to sell both ways and be comfortable doing it. And all it takes is just some comfort in being able to read price on the chart, or more specifically, understand the language of the market. That's what we're talking about here. In all the stuff that we're showing on basically live charts. In all of the things that we talk about, what does price want to do? It needs to take out the previous wave's high. That's what it did on this 4 hour. So there's our move up. That doesn't accomplish taking that out. We pull back. Now we take out the previous wave's high. There's our equal bottoms again. What's this candle looking for? Now that it's gotten this, it's looking for this, and so on and so on. And if it takes this out and then all of a sudden fades, we know where it's going to fade to, right? Current price is going to look for past price each and every time. And then when we start to throw on just quickly the 20, the 50, and the 200, 20 being green, 50 being blue, 200 being red. So when this big ski slows down and you're looking to take a short, we kind of seen what to look for, right, in the past. In each and every one of these cases, do you know what happens? Price gets too far away from the 5 EMA and the T-line. The horse gets too far away from the barn and wants to come home. And that's what happens. That's what's one of the things that triggers those moves. So what are you looking for up here? When you see these big impulse tops, I'm glad we found this chart when we did. Notice what happens? And this is a 4 hour, but your 5 EMA goes from white to red quickly, right? Because this is an impulse. These impulses, when they pull back with momentum. It's not a slow grind. So it triggers that change in color quite quickly on that indicator. So that's what we're waiting for. We're waiting for an opportunity to short a top, or as close to as top as we can get. But many people have died trying to short this already. So just be patient and wait for your opportunity, and it will come. And how do you kind of maybe find when that turnaround might be coming? Well, you look to the shorter time frames, and here we're on the 1 hour, and it's showing us that that's quite the pop. And you just keep peeling back the onion until it makes sense. So this is a pretty organized move, right? Where's it coming off of on this 30-minute? Right at the 200. You've got your 50 and 20 all coming together in here, and that usually creates some sort of an impulse move, and it did. Impulse up, sideways, get a little love from the 20 in here. I'm sure there's something holding it up in here. And the beat goes on. This is a test of the 50, and you get what again? Impulse down, next candle, 2 equal bottoms, 5 EMA goes from red to white at the 50. Where do we like to buy and sell? At the 50. So I'm always looking for time frames where price is working off the 50. And for me, it's just a measure of, it's kind of grounding myself. There's a lot going on today in markets. This is the FEG chart, and I'm just trying to find the right one. So this is the daily off of MEXC that I'm using, just because it's easy to access. But, you know, it's the same as some of these other charts we've looked at. You know, their big moves higher, get completely squished, and then they start to show signs of life again. And if you're looking at the daily, what do you notice? And again, this could be Bitcoin, it could be oil, it could be IBM, it just happens to be FEG token. You notice that it finds this support at the lower value range. So maybe this is, you know, you could see this as an opportunity to buy at a level that looks to be not just kind of, you know, not the low, but low-ish, where it's supported. You know, maybe that's not a bad time to buy. Isn't that what you're looking for as a trader? You're looking for opportunities when, you know, price has moved down and created value. Sure. What are your upside your upside targets? Well, we already know we would look for the 20, and of course you've wicked it and pulled back. But what you'd be looking for is to take the 20, trade into this gap in here to reach the 50, and or you know, you've got the POC and you got the 200 on up in there as well. That's what you're hoping for to the upside. Right? These attempts so far have failed, but it seems to be, when you look at past price, this is an area that it wants to try and regroup itself at. But either way, you want to look to that point of control at some point in time. So maybe there's value now, right? That's what we look for. We look for value. Let's look at Solana real quick, because it's done what? Bounced off the 50. Now it's taken the 20. What is price looking for? I know you know the answer to this. It's looking for the previous wave's high. You're starting to cut into this volume gap in here, in this gray, which we already know is light trading. So there's less and less past priced for us to chew up in order to get to that top. Right? So this is the first attempt, though, at the 20 since you broke it here. First attempts have a higher probability of failing, although this candle has 7 hours on it. It looks like it wants to take the 20. And what's your takeaway when you have price bolt through either up or down a major moving average of some significance? You know, it's got velocity behind it, and it may have, you know, be a bigger move. You can see the divergence that's starting to form between the T line and the 5 EMA. The wider that gets, the more momentum there is in that move. Again, you look at your stochastic RSI. This one's even cleaner than the other example we showed. And then the Fisher, and look what happened. The MACD moving average and signal line just basically came back to 0 and then said, I'm not having any of that. It's arced up already. So there could be some momentum to this move as well. We've had a couple soft mornings, and then all of a sudden, like late in the morning, you know, even yesterday, you know, the market picked up a bit. But what you're seeing is just sometimes you think we're on the same chart because we're showing the same price behavior time and time again. That's the market talking to you. That's what it is. That's the market talking to you. Our job is to have the ability to understand what it's trying to tell us, right? And that can be an easy say or a hard do at times. This is oil, yet again, right? We look at this chart regularly so that we can kind of go back in time and validate, geez, the stuff that we're talking about, did it actually materialize? Right? Sometimes it does, sometimes it doesn't. You're not a mind reader or rubbing a crystal ball or reading tea leaves or doing tarot cards. That's not what this is. This is a language. It's based on mathematics. Mathematics is a language. This is a derivative of mathematics, so it's a language unto itself. Going way back into the fall of 23, which was the top. If we want to really look at longer trends, I like the weekly chart. And on the weekly, at that point in time, we got what? This doji at the top of a bull run. The same thing that we look for on our 5-minute Bitcoin or 15-minute Bitcoin chart, we're here looking using the same rationale on our weekly oil chart, which is the most valuable trade in the world each and every day. It shows us a doji at the top of a bull run. To me, that means something's happening. There we see 5 EMA start to change colors on us, then we get this big dart that breaks through the T line, and the 5 EMA with some velocity. Divergence opens up. These green candles, they're just green candles. Focus on the trend. The only time this is a problem is if you're too leveraged. If you're using too much juice, you're going to get knocked in and out of everything that you ever trade. You'll have more successful trades dropping that leverage down a little bit. And I know that's difficult to understand for a lot of people because it's the temptation of hitting a home run is so great. Well, that always doesn't, hitting home runs doesn't necessarily create champions. Right? Just to use a playoff baseball analogy. Right? Put the ball in play. Get on base. Advance the runners from there. If you swing for the fence each and every time, you'll be the strikeout king. Right? And we don't want that. Right? Just chip away, chip away, chip away. move the base runners. Right? That's what we want to do. So don't get scared of these little green candles or big green candles, as long as the trend stays intact. Now, if it's a monster move and you're using too much juice, then you're going to have problems. You're going to have to deal with them. But this is what the chart's telling you. The chart's telling you exactly what's going on. Don't create problems for yourself by using too much leverage. Right? Doji, top of the bull trend, tells us there's something cooking. It's a short opportunity. To me, it makes no sense whatsoever to be looking at that candle and then say the next level is 110, 120, because that's what was happening at the time, with that $95 hit. But the chart wasn't telling you that. The chart was telling us something different. Right? And it just capitulated. There's our first opportunity to connect 2 equal points. So what do? We create a trend line down. Am I going to live and die by it? No, neither should you. But it's there so that it helps guide you through the trade, helps put some structure around what you're looking at. So you have a nice short here. Price goes sideways. It's got to recover a little bit, take a little bit of time to breathe and fuel up again. And then it takes another run higher. A rejection at a level that kind of creates those 2 equal tops usually is a significant one, at least in my experience. And this one was no different. Where did it pull back to? A level that's been identified previously at $75. What happens? Creates those 2 equal bottoms, takes another run. What happens? The moment I saw that wick at that trend line, I was like, that's just creepy. Because I'd never expected it to ring this true, right? But here we are. And so short-lived little run, maybe, a month, right? And then fails at a significant level. What are we doing here? We're making lower highs. Are lower highs the sign of bull moves or bear moves? Bear moves. Right? We're making lower highs. Now we lose support. Not just wicking, but I mean like you're losing support of that $75 level. And look at the divergence between the T-line and the 5 EMA. And it's completely red. That's just showing you in so many different ways that this has momentum down. So here we go again. Impulse down, a little sideways action that can't break trend. We test the T line and we fade it. This candle, nice big green candle, but it doesn't really change trend. And then we get this doji at the top of this, creating this here. What else is going on this chart? Let's find out. What's this? This is the 200 MA. So you see this doji at the top of this run, this big point out here, and it's all happening in and around the 200 MA that you can start to see is that support and resistance level. There's the support. Now we're resistance. Was this kind of a first attempt? Yeah, it kind of is, right? Here you broke it. This is your first challenge of it and you reject it. It's not even, you don't even get a chance to wick it. It's just a massive rejection. Did you ever get a buy signal in here? No, you didn't. These were just the cheater candles that failed. So what happened? You have an impulse down, failed breakout at a level that's very relevant, the 200. What happens? Price comes back down and does what? Takes out the previous wave's low. Here you have these flush candles again. What happens? Is this divergence still intact? Yeah. Right. It's unsettling when you see these candles, but they didn't really change any trend. Here's another attempt at the trend line. And then what happens? Here's an absolute failure at the 200. Look at this doji. Look at this. That's as close to a gravestone doji as you're going to get. The only thing that would make it exactly that is that the little thin body would end right at the bottom of the wick. And you can see it's just a touch above it. But again, this isn't pin the tail on the donkey. That is an ugly failure candle on a weekly chart at the most basic bull bear indicator that the market has. And it just rolled. And the beat goes on, right? Same process, repeat play. Here's our $61 level. The level that sounded like you were an absolute lunatic if you said it out loud, back here, has all of a sudden been tagged. Now, there are going to be people that will tell you that if you stay bearish long enough, sooner or later you're going to be right. This has nothing to do with anything like that. It has to do with the simple fact that the market tells you in no uncertain terms where it finds love and where it doesn't. I'm going to condense the heck out of this just to prove a point. The amber line is a 1,000-day moving average. This is a daily chart of oil. Look how many times it's used it as support, resistance, support again, and again, and again, until you fail it. Back in here. So now all of a sudden, it's meaningful resistance. It wasn't just a wick down and, and then you snap back higher. This is a failure of a very, very long-term average. And what does that tell us? Well, it tells us that we are potentially, I'm switching to the weekly here, we're potentially in the midst of either a massive trend change or a structural change. What causes that? I don't know. I don't care. I honestly don't care. I'm interested, but I don't care, if that makes any sense. What am I interested in and care about the most? What price is doing on the chart. Having the ability to understand the language of the market. When you get support from 1,000 days on a weekly chart, which is like a couple decades in years' time, and you fail that, that's problematic. And if we go to a monthly chart, because we know, so now all of a sudden, the only thing that appears on our chart is this 500-day on the monthly because the 1,000 just doesn't have enough time, right? So all we're seeing now is the 1,000 day at 47 and change. Is the divergence still intact on oil? Yes. Does this look like an impulse down, failed breakout? Maybe we take out or come back to the previous wave's low? Well, that would put us at 58. And as soon as you get into the 50s, what happens to the brain? It's already thinking $50. Interesting, because knowing that current price revisits past price, break one level, find the next. Like if we look at some of our shorter, so there's the 50 on the monthly, broke that. There's the 20 and the 200, broke that. What's left? Did I miss anybody? There's the 100, broke that. Break one level, find the next. That's what it wants. And then you're going to say, well, what does that look like? When was the last time that it actually did that? Well, let me show you. Whoops, I took it off. Back in here, that was when it had that significant dip down to like just below 20 bucks. But back in here, way back in here, back into late 1999, 2000. And that's about as far back as it goes, to 93 on this feed anyways. So what does that sound crazy? Yeah, a little bit, but it also sounded crazy at 93 going to 61. Well, here we are. Yeah, it sounds crazy, but it's not crazy. Will it hit it? I don't know. We'll find out. The only thing that will stop that is a whole bunch of money coming in to change the trend. But the trend's been pretty clear for the last year and a half. Lower highs, lower lows. Failure at either major moving averages or other significant levels of past price or, channels and trend. Fail, fail, fail. The market's telling us, this is the monthly, that it's still in a bearish mood. The weekly, same thing. We're not suggesting that price stays here. That's not what we're doing. But we're saying that it has the possibility of going there. And we provide a rationale to try and demonstrate how we come to that conclusion. But as every oil trader, or everybody that's ever traded oil, is all they need is the slightest reason in their mind to buy it for some reason, and it's just not there yet. And we talk about the 61 level all the time, and it's a real level. Nobody thought it was at 93, but I'm pretty sure they do today. Will it eventually turn around and become a real good buy? You better believe it, because there's tons of upside now, and when that thing gets unleashed, I'll be there, but it's just not right now. Again, you have any questions of these charts, don't be afraid to show us. Now, this is gold on a weekly chart. Another rocket ship. And the reason I'm showing this is because this is another example of being in that pure price exploration zone. Right? So as we're trading it, we look at this weekly and we can see, the metrics that we use to determine what trend is. Well, it's pretty clear the trend is up. That divergence is pretty strong. Price is holding the levels that it needs to hold in order to continue on. But where does it ultimately go? We don't know.
Yeah, all right.
So you can see this gold chart. This is the weekly chart. We're trading above 20, the 50, the 200. We're trading above everything. And we really are in price exploration mode. Where we go from here, I don't know.
All right. So, what are you doing? What are you doing? This one, this screen. What are you just doing?
So
This
I'm
crypto.
just
This
going to
crypto.
continue to move on here.
Yeah. Why is this crypto? Why is this one? Sorry.
Sorry, but I'm going to have to mute you because I can't have you going on in the background. Let's look at Aster. And this is something that's, oh no, wrong chart. Where are we? Here we go. Aster, there we are. So this is a new, I don't know what it is, a platform, an exchange platform, I don't know. Nevertheless, it's a chart that everybody's talking about. There's very little data though, right? And you're going to see this if you're in the crypto space all the time, right? Very little data. So there's your daily big move up. Looks like we might create a little bit of an M pattern, but we'll see what happens from there. This could just be big move up, retracement, and another big move up to take out this high. We always have to be sure and aware and certain of, are we trading a trend breakout or a retracement? But the only way we can kind of get our heads around this thing is to start to drop our time frames down. Right, so now we see the 20 MA pull up, things like that. I'm going to go to the 4 hour because it's really nothing really relevant. Here you can start to see some structure in price. So what are we looking for at this 50? This is an area where we might find some resistance. So if you're not already long, you don't want to long right here, right? You don't want to long into resistance without validation of breaking through, right? And a lot of people will, long right at resistance, and then all of a sudden the price rejects that level and it makes a quick dart down. Here's the 1 hour. Everything's fractal, right? So as we start to drop our time frames or increase our time frames, we will see different averages appear in different places. So on our 1 hour, here we see the 200, the 200 at 188. Just out of curiosity. 180, well, that's the 50 on the 4 hour. So does that make you very confident that if you were looking at this chart, even back here, right? You know where the 50 is, you know where the 200 is. Those are your targets. We talked about these things all day long today. These two red candles are just red candles in an uptrend. They're in all likelihood there to try and stop you out, shake you out of your trade. But the divergence is telling you that you can take a breath, everything's going to be fine. And lo and behold, the next candle, 2 equal bottoms, and then what happens? The trend continues. And it's certainly looking for that 188 level. Is it the first attempt on the 1 hour? Sure. You would anticipate a little bit of resistance here and or a rejection. If it blows through, well, then there's a message in a bottle, right? It's got some spunk to it. It's going to want to run. What will it run to? Probably try and take out this level here. So the takeaway for you is that as you're trying to manage this trade, you're always thinking that, okay, current price is looking for past price. So finding the 200 would be part of that process. You break through the 200 because you know those first attempts often fail. But if you break through and start looking for these levels, well, then you might be onto something. But you're always thinking, okay, current price is looking for past price. Took one level. Okay, now it's looking for more past price. Here's another level, and so on and so on. And then again, you're using your fractal analysis, all the different time frames that we have at our disposal, to try and make sure that you're managing the trade. It's staying on the right path. But don't forget the time frame you made your trade on. Write that down in your rules, right? Most people, if I ask them, oh, what time frame did you open this on? They can't remember, right? Well, if you can't remember what time frame you opened the trade on, I'm pretty sure you didn't set a stop right away, and you probably had no intended exit as a target. And that's undisciplined. And that's what we want to try and avoid. We want you to be disciplined. Like, why are we here? We're here to take this seriously. We're not here to lose money. We're here to make money. So let's not be silly about it. But this thing, this Aster, whatever this is probably going to be fun to trade for a while. Just like everything else. These are just means to an end for me. There's very few things that I have any sort of an attachment to. These are just, again, means to an end. We talked about Tesla on Tuesday, on how it's kind of running a little hot again. Well, here we are. And it's doing exactly that. Has it broken trend yet? No. Right? So although we have this giant red candle, it hasn't broken the T-line. So trend is still bullish. Tomorrow being Friday, we'll see what that brings. But what's the downside risk? The downside risk on the daily chart is you obviously break the T line at 439.90, and you break one level, you'll find the next being the 20. You haven't even found the point of control, because remember, this is all, think of this as a little bit of a premium up here. All your meaningful trading and volume is down here. The 50 MA rather lines up with the upper value range. So price is overextended, and on its way down, it's going to do what? You're trading above the 20, the 50, and the 200, and it's going to come back and check those levels. We've seen it a million times before. Let's look at Apple quickly. So Apple broke trend here and now has gone and done what? It's trying to take out this previous high. So to kind of further reinforce what we just talked about, that's what's happening here on this Apple chart. As price is moving higher, it's looking to take out those past levels. See this level in here? You know, we talked about the lining up the top of the 5 EMA and stuff like that. It usually connects something. Well, here's a good example of it. So this is structural. That's what I'm trying to show you. So you have price here failing at these levels. This is kind of structural. So breaking through that is meaningful. So you break through that level right off the 50 again. Big green candle. 5 EMA goes white. And boom, the trend goes higher. And the next wave is looking to take out what? The previous high. Little retracement. Basically, you got to take a breath, have a meal, right? You can't just keep running all the time. Price bounces, takes out this level. Takes a little pause. Now it's taken out. That's this top. That's what it's shooting for. Take out some of the noise, put it on a weekly chart. The longer time frames are going to smooth out what you see on the shorter ones. And I'm just going to remove this just because it's obviously broken out. So what do we have? Everyone's going to be saying, well, we have a double top on a weekly chart. Well, what we have before we start screaming double top, we'll simply have two equal levels of price. Now, if you didn't sell up here, right? There's our doji again at the top of a move higher. But if you didn't sell up here at 260 or whatever that was, seeing this big pullback, and here you are at 257. A couple things happen. There are times that all those people that didn't sell up here go through regret, and then price gets back up to that level, and they said to themselves, well, if I get back up to 260 again, I'm out. So there's a little bit of that risk. And that's more of a psychological thing than anything else. But remember what we talked about earlier. Are we looking at retracements or like complete trend changes? If price was to pull back from this equal top to, let's say, the T line, maybe we get, 2 or 3 red candles on this weekly chart, but then price gets into to where the T line is, and then all of a sudden it pops and starts to take out this level, first mouse maybe, right? starts to take out this level, and then it's the second wave that gets it, that does it. So that's, we have three choices: up, down, and sideways. Simple as that. If we come back to the 20 and 50, which is very probable it's going to happen, that draws you down to a whole other level. And keep in mind, this thin blue line here is the upper value range, right? So price is kind of extended, but it doesn't mean, here's this big candle and then price went sideways. The divergence between the T line and the 5 EMA stayed completely intact, and the trend just continued to march on. So there's nothing saying that you can't see pullbacks, right? Even big wicks. This would have been a big red candle at one point, scaring everybody, but ultimately it held the trend. So always keep that in mind. Is this a retracement? Boop, 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 and then boom, the beat goes on. Or is it a reversal coming back to check all these significant levels of past price? Because you're trading above the upper value range, that is more likely than not. At some point, you have to come back to a reasonable point and a reasonable level. This is MicroStrategy's weekly chart. I know some of you like to look at this chart. What do you see? Blow this up. 50 MA, 200 MA, doji candle at the top of a move up. Interesting. Up, down, and sideways. Those are our three choices. Is this the first test of the 50 since it was broken up here? Yes. Not necessarily the first of the 200, however, but it is the first of the 50. And of course, you're revisiting the 200, which is still resistance. And you're printing a doji today. The stochastic RSI, the Fisher, even the MACD, bullish, I put in quotes, right? You can represent it by what you're seeing here in price. But here you are on a daily chart, price testing the 50 MA first test and the 200 MA, your most basic bull bear indicator. So what happens if we fail? Let's look at the downside first, right? Three choices: up, down, and sideways. Let's look at down. If it fails, you're going to come back to, in all likelihood, the point of control, because that's going to be a draw for price. And down here with it is the 20 MA and the T line and the 5 EMA. So if you fail it, you can expect at least, at a minimum, some contact there. And then what would that create? Right? It would just kind of create that kind of a retracement, and then potentially a move to challenge this level, or conversely, it rolls over and takes out that level. And then the sideways would just be doing that along the point of control. Right? And that's how I want you to kind of focus on your charts, just from an up, down, and sideways perspective. And you're saying, well, that's pretty simplistic. It is, because once you start doing it, you're going to realize that your head was filled with a million other things that didn't need to be there, right? Just focus on the up, down, and sideways. What is the more likely path for price to take based on the tools that we use each and every day? So if we're long, we're very aware that we have this here as resistance, and there's a potential for a rejection. So it could be a short opportunity, or if price breaks through and you're already long, then a continuation, you get above this level into the gap here, and price can look for what? Price breaks out, it's going to look for the previous waves highs up in here, which ironically are up where the upper value range is. Okay? And then to get a look into what might be happening here, because, remember the whole nesting doll theory, right? You open them up and you can see inside. Well, let's go to the 4-hour chart and look inside that daily candle. Does it change our mind a little bit about what we might see? kind of does for me a little bit. So on the 4 hour, you can see this nice little base. Your impulse up actually gets rejected. On the pullback, you get your buy signal, which is almost like a snapback because the thing just gapped. But a little bit of resistance here, but price breaks through, wicking the upper value range on this time frame. It's still hanging up here above this level. It's like, so I'm interpreting that as a little bit of bullish. You know, you wait for price to come back to the T line or the 5 EMA here and start to march higher. You get into that little bit of a volume gap on the 4 hour. So could be interesting, but expect it to come back and test this level, right? You can see how this is now support and resistance quite clearly on this time frame. And you're using your other momentum indicators to see and if you're going to get a fail. And we just continue to apply the same rationale over and over and over again. We showed the heartbreakers last, I think on Tuesday. You know, it's still continuing on. Right, here's your rejection. This is canopy growth. Big test to the 200. Massive failure right back to the 50. Right, bounce up off the 50. What do? You test the 200. You fail, right back to where? The 50. At some point, the 50 is going to give you the finger, and it looks like it might be here because you'll break it. Like, it's only going to give you so much support for so long if the downward pressure continues. And it's not necessarily the strongest asset to the upside anyways. You can see the 50 saving it, but eventually, with the continued pressure, it fails. Here's Tilray, same kind of thing, big pop up. You know, now we're doing the big fail quite regularly. Had a big move down, breaking major moving averages with some velocity. Didn't quite make the 200, but you have that impulse down, snap back up. Here's your buy signal. Break through the 50 and then start to get some heat again. What happens if price falls back into this volume gap? Look to it to come where? Back down to the 200 or kind of the bottom of that previous wave. One of these two. This could also ultimately be just a slight retracement that finds support at our filter level of the T line and the 5 EMA and then continues on. And if it continues on, it'll look for what? This level here, which represents the previous wave's high and kind of some structural support. And from there, you start going back to the 17. Just rewind, play, rewind, play, rewind, play. ETH. So here's a level that we dropped on ETH. Didn't quite come back to it, but pretty darn close, and has popped again and did what? Broke the, here's your break to 20. There's your first test of the 20. So yesterday's candle paused at it, but today's candle literally opened at it and has moved through the 50. That's bullish, right? Yes, we're in an area of light trading and all that stuff, but that's bullish price action on your chart. Look at the divergence in the stochastic RSI and your Fisher transform and your MACD starting to show you green histograms and starting to show that moving average and signal line on the move, and it wants to kind of arc higher. Those are all bullish things, right? Move down, little base out, and then momentum up. That's the ebb and flow. Right? This is how you monetize the chart, taking advantage of the market's natural movements. Don't get inside your own head to try and figure out the meaning of life or why something is doing what it's doing. Right? Why is oil falling off a cliff today? Why is this chart not responding the way it should because this happened? That's just going to hurt your head. The only thing you need to focus on is what the chart's telling us, regardless of what our personal belief is. This is a chart of a futures chart of YM, which is the Dow, and it looks like it just wants to go higher. Does it concern people that it's moving to the levels it is? Yeah, and rightfully so. But you have to trade what's in front of you. That said, you also need to understand when to sense danger. And that's what hopefully you can take away from these types of sessions, right? That you can find the danger or see the danger before it becomes problematic. And what is problematic? Well, problematic would be, here's BNB at $1,000 and, you know, round tripping your investment. You know, even if you bought at like a whole bunch at 800, are you going to be prepared to watch it bounce to 650 or 720? Hopefully not. But you have to be able to understand when danger's around the corner. That's why we talk about, you know, pay attention to when you're trading above the 20, the 50, and the 200. Right? Pay attention to the signals you get. These sell signals that you're seeing on this BNB daily are just more indications of retracements, right? So over here you have that big impulse higher. The next candle, what does it do? Forms an equal top and then pulls back. This is a retracement. Right? Next wave takes out the previous wave's high. Retracement, again, notice the equal tops, impulse up and equal tops. Doji candle up here, equal tops and a big pullback. But find support at the 20. This looked disastrous to some people. Right? This was starting to get people saying, oh no, you know what? It's all over. We're coming back to the 50 and then the 200, which eventually will happen. But it just wasn't today. Right? You got support all along here from the 20. That's incredibly bullish when you see that. Now you've opened up again, and you're trying to look for what? These highs. And after that, you're in another situation where it is pure price exploration. Right? And I have to admit, that makes me nervous when I see things like gold and other assets at that same level. It's a little nerve-wracking, right? Or at least it makes that kind of reasonable, rational investor and trader inside you go, I better find my short pants, because when this thing rolls over, all of these things combined, when they reverse, they'll reverse with some velocity. And that's why if you learn how to trade short now, when the bear markets come, you're prepared for it. And you're not sitting here trying to catch falling knives. Don't want to be that, you know, because all you know how to do is buy long. When the market's reversing, what are you buying? You're buying slight retracements higher, and then the downtrends continue. All the stuff you used to do doesn't work anymore. And I know it can be uncomfortable for some people to entertain the idea of selling short, but it's really not that hard. And it's, you know, the same rules that we use and everything else still apply. BNB weekly chart, runaway freight train, but price will, just like it did back here and back here, eventually tag those levels again. It just will. But this has been an incredibly bullish chart. There's no question about that. And kind of nice to see BNB remove itself from the back seat of the van, because it's really, really done well. And you can see your targets on the way down, right? They're very clear for you to see. So I'm happy that, you know, BNB's responded the way it has, but ultimately I don't care, because I'm a trader, and all I'm looking to do is monetize the chart. Simple. Or it sounds simple, anyways. Now, any other questions or symbols that you want us to look at? We certainly can do that, because we never catch them all. We always forget something. Anyone? Bueller? Because if there isn't, then we can end this session and we can pick it up on Tuesday. But just as a reminder, if you don't have your BYDFi account, open it up, use our code, and later on today I'm going to select, or maybe I'll give you guys a few hours anyways, but I will select someone who I'm going to allow to use the script for a month. So make sure you get your new account, maybe send me a message telling me that you're signed up just so I know, and we will go from there. So remember to write down what the rules are. We talk about them, but write them down and make sure that they're front and center when you're trading, so that you don't make those little mistakes and you hit the button and go, oh, damn it, I shouldn't have done that, like I did today. Make sure that they're all there for you to see, and if they're there, you'll use them. Take your profits as reasonably frequently as possible, depending obviously on the time frame you're trading. But again, when you have significant profit, don't be afraid to take it, or some of it, because I'm hearing that some of you are just letting them run a touch too long, and then they come back, reverse on you, and then you have to give it all away. So we don't want that. Take it when it's at a premium, when it's meaningful to you, and don't round trip it. I'll wrap this up for now. We will see you on Tuesday of next week. Have a great weekend, and know that you can reach out to me at any time with any questions, and we will pick this up again next week. So have a great day, everybody, and we will talk again soon. Actually, you know what? I'm sorry, I just saw this request because I wasn't looking at it. What's NBIS? I'll do it. Nebius Group. Wow. Nebius. I have no idea what this is. Technology services, package software. Okay. Well, whatever it is, it's gone off like a rocket ship. There's the weekly for it. So the question would probably be, what do I do? This thing, if you're not already in it, maybe you have to try and find a better buying opportunity. But whatever they do, someone's taken notice. There's the monthly chart. So this is all transpired in the last few months, or this year, really. So, wow. I hope you're in at a great entry, because this thing has just been a monster. So good for you. And then LLY. All right, so finally got a break above the 200. Looks like it's a meaningful one, but these big kind of parabolic candles, they often can get like these big moves often get reversed. So I would just be cautious up here, kind of similar to this. Like if you see this kind of thing, this pointing effect, you'll see it a little bit up here too. At these big tops like that, just be aware that this thing could pull back. But, again, if you're in at the right time, it's a nice stock. I like the weekly chart. I like this much better, actually. So the weekly, if you take the 50 here, start looking to the left, what are your other